Welcome back, guys. So yesterday I have covered the fair value gap, how to balance the fair value gap, and today, as I told you, that I will talk about the volume balance, how to balance the volume balance. So first of all, I would like to talk about volume balance. What is it? Okay, you see this gap. There is a bull candle and there is a bear candle. Inside here, there is no trade. Actually, no trade happened over here. So this is actually a gap. You can say the volume gap. We called it the volume imbalance. So anytime you see a gap where there is no body, yeah, there could be a wick overlapping each other, but there is no body actually. So that will be the volume imbalance. You see this is volume balance. This is actual gap. There is no wick as well. So this is actual gap. There was no trade at all. But here there is wick but no body. We called it volume balance. So how do you know this gap or this imbalance is balanced now? First of all, you have to think. Okay, let me go with an example. That will be better. Okay, let me go here. So I have marked this volume balance. Now I'll share how do I know this imbalance is balanced now. You know the fair value gap, like this one. This is a fair value gap. There is a BC, buy side imbalance, sell side inefficiency. That means if there is sell side, the bear candle come and reject the price, then it will be balanced. But when I will talk about the volume balance, there is no buy side, no sell side. That means we need both buy a bull candle and bear candle and body. Like here you can see there is a bear candle. That means the black candle, it has completed the sell side over here to this gap, and also a bull candle, but there is a small gap. You see the gap. So if I mark that gap, this whole area is now balanced. You see this area is balanced, but there is a little portion which is not imbalanced. You have to think like there is no trade at all. Not no trade actually. There is no body of a bull candle or a bear candle. So this is actually an imbalance where we need both the bull candle, bear candle, both of them. If this candle opened from the starting of this gap, the bull candle, if it opened from the starting of that gap, then this gap, this volume balance would be the balanced volume imbalance. But there is a little portion. So if I mark this portion, actually, let me mark. So this little portion is not balanced yet. We need a bull candle that will close this small portion of the gap. Then this whole volume imbalance will be balanced. Let me give you another example from here. Guys, it is very simple. If you think trading is hard, then you are wrong. Trading is very easy, but we guys, we are making this hard. So you see this volume balance, there is a wick. We don't care about wick. If there is a lot of wick that close this gap, still this volume balance is valid. So we need both bull candle and bear candle over this gap. It should be overlapped. We have the bull candle, but there is no bear candle. Still this volume balance is valid. So price can come to this volume balance to balance, to make it balanced. I think it is yeah, it's not tricky, but okay. another volume balance. Let me mark it. So this is another volume imbalance. You see this bull candle. So in this gap we don't need the bull candle anymore, but we need a bear candle. So when price come here, this imbalance is balanced now by this candle. We need a body, not a body, we need two body. One is green body, one is black body. If we get two bodies in a volume imbalance, then that volume imbalance will be balanced. So when you see this, if price, like, see here this week or this week here, you can take short because you know this is balanced price range. So price doesn't need to go to this gap again and then go to the short. If you go to the lower time frame, you will see a setup over here. You will get confident to take short. Why balance imbalance? We need it because sometimes it happens that we saw some setup, but we are not sure that price will stay there or it will go to my stop loss. So when you know the imbalance price range is balanced, then you will be confident. That's why you have to keep in your mind that the gap is actually balanced or not. So there is some type of gaps, like fair value gap, volume balance, then the opening gap or something. You can say the opening range gap, new week opening gap, a lot of gap. But here is the volume imbalance, which I'm talking about today. How do I know this imbalance is balanced? So for making a volume balance balanced, we need both candle, this bear candle, this bull candle, both of them, not weak. If week comes, on 2 3 4 times, I don't care. This imbalance will still be imbalance, not balanced. Let me think about another gap. Okay, see this volume imbalance. So we need both candle. There is a bull candle, sorry, the bear candle and bull candle. You see these two candle, there is no gap and they actually close this gap. In that place, this is actually balanced. So when this candle started, if you go to the lower time frame and see a setup, you can easily take a buy because you know this whole imbalance is already balanced. So if you find this is a 4 hour chart, guys. So if you go to the 1 minute chart or 5 minute chart, if and you see a setup over here to this candle, then you can easily take the buy because you know this imbalance is balanced. So price went over there and actually you see there is another volume balance. I'll mark it. And this imbalance is balanced. Is it balanced yet? No, it is not balanced. You see this bull candle, then the bear candle, but there is a little inefficient place where we need a bear candle. So this imbalance is not balanced yet. When does it balanced? Still, if you mark it here and from there, in that specific candle, this little portion of the volume balance, total volume balance, this little portion, it's balanced. The other portion is balanced over here, but this little portion it has balanced to this specific candle. After that, price doesn't need to come here to this gap. Yeah, it came here for the liquidity, but you see the big run, not Mickey Mouse move or something like that. And when price come back to this gap, it reject the price. You see this little gap reject the price. That is how you know when it is balanced, then price can go through that for the liquidity or for balancing the another imbalance. But when it has done its job under the price or over the price, then this specific gap, it will help you to you know, to make a clear entry, to make sure that it will be a clear entry. Like here you see price just come to this gap here, first time here and second time just this portion, little portion, and price went higher. You see here this little gap, small portion of the imbalance, price can come to this balance, this place later, and make it balanced. So that is the main thing, man. If you see the volume balance, we need both candle, the bull candle and the bear candle. If we see both candle and the body, not the wick, body, then it is balanced. And later in the time, if you see price came to that gap and to the lower time frame, you see there is a setup, you will be confident to take short or buy. I think it will be clear, and that is how you will know how to place your stop loss or something. How do you trade in that particular place of price? And yeah, that's all. Thank you, guys. And guys, please let me know if it is okay. Then I will continue to upload more and more video about clearing this all of this confusing concept to the easy way. Or if you think it's not important, then I will quit maybe. Thank you. See you guys. Bye bye.